over here. Remember, these questions are one of the few of the important questions which can be asked in the exam. So chapter number 1, exchange rate and forex business. So let's start. Which of the following statements is false? Now check the answers. Which of them are false we don't want true, okay? Which of them are false? So the forward exchange rate is a good predictor of future spot exchange rate. So forward exchange rate is a good predictor. Predictor means can it predict of the spot exchange rate, future spot exchange rate. So is it so? Firstly, what is the difference between forward exchange rate and future spot exchange rate? Always remember, spot means what? Spot means whatever you are having right now. Spot. See here, suppose if I say today is what, suppose let's say, imagine this is September. So when I say September spot, okay, spot September. So what does it mean? Spot September. So it means what is the present rate going on in September. When I say forward, forward means November forward when I say. So this I am guessing. I am doing the calculation. So forward rates are always based on calculations. Forward. Okay, they are based on calculations. But spot rates are always based on practical. What is the present situation? Okay, this is real. This is imaginary. This is calculated. So what do you mean by this September spot means today's rate. But what do you mean by future spot? Future spot means, suppose here, if I say that in November, the forward rates may be, let's say 80 rupees or 85 rupees, maybe. So how did I say that? I'm saying this on the basis of calculations of the forward rates. But actually, in November, what the rates are, when the November comes, so that time the rate which is there, that is known as future spot, means November spot. So the forward exchange rate is a good predictor of the future spot, means what the rates might come in the future. So is this statement false? No, the statement is true. So here I'll write it true, right? Because forward exchange rate is definitely giving me the prediction and what can be the rates in November or whatever month it is. Forward exchange rate and the future spot rates may not be the same. Means whatever I have calculated for, let's say, same example we'll take. Whatever I have calculated for November and what the actual rates of November when the time comes. So may not be the same. That is obviously true. Because these are totally based on my calculations. It can happen that something might happen between September to November if there is a war, huge war between Russia and Ukraine. War goes on. So in that case, what will you do? The rates will be totally different than my calculations. So may not be the same. That is also true. The forward exchange rate is an unbiased predictor of future exchange rate. Is it the same? So forward exchange rate is an unbiased predictor. Unbiased means what? There is no bias in that. It is purely based on data. That is known as unbiased. The forward exchange rate is an unbiased predictor of the future exchange rate. Whatever may be the rate coming in the future. Okay. So my forward exchange rate based on the calculations means what is forward exchange rate? 3 times we have seen this forward exchange rate. What do you mean by this? Say this. Forward exchange rate equals to forward. I'll just write it over here. Forward equals to spot plus or minus premium or minus if it is there, then it's discount. Okay. This is basically the forward rate. Okay. So forward rate is the unbiased predictor of future exchange rate. So that is also true. What about the last one? The spot exchange rate is a good predictor of the future exchange rate. Means what? Spot is today. Spot rate is today and future exchange rate is in future. So whatever is in future, how can a this spot exchange rate predict that? So this is false. Okay. If this would have been reverse, the future exchange rate is a good predictor of the spot exchange, then this would have been true. So the answer which I want is D, false one, because I want false, isn't it? So this is false. Spot exchange rate is a good predictor of future exchange rate is false. Okay. The objective of central bank include. Now what is central bank? Central bank means RBI. Huh? Here we are talking of not Central Bank of India. We are talking of RBI. So the objective of RBI includes to ensure that a country's balance of payment remains in equilibrium. BOP remains in equilibrium. Okay. Second, to accumulate country's foreign exchange reserves. Accumulate. Go on accumulating. Is it that? To ensure the implementation of country's exchange rate policy. Ensure the implementation of country's exchange rate policy. And to control the international trade. So which of them includes? Now we want true one. Huh? We want a true one, not the false one. In the earlier answer, we wanted false, right? So which of them is true over here? To ensure that the country's balance of payment remains in equilibrium. To accumulate country's foreign exchange reserves. To ensure implementation of country's foreign exchange rate policy, forex rate policy, and to control international trade. So what all can RBI control? Firstly, let's go on the removal method. Means we'll remove whatever is not required first. To control international trade. This is not possible for anybody to control any international trade. So this is false. Next, to ensure that balance of payment remains in equilibrium. So remains in equilibrium means this is the main job of RBI actually. Okay. So main job of RBI is this. Balance of payment remains in equilibrium. So the answer over here is true. What about the other two? They accumulate foreign exchange reserve. What is the word called as accumulate? Accumulate means if tomorrow RBI goes on accumulating all the forex reserves, all, okay, it goes on just collecting the forex reserve, dollar rates, just collecting the dollars. What will happen? If the dollars are collected in huge amount, it may happen that after all dollars are collected in the current account. So it doesn't give you any balance, and it doesn't give you any interest. So that is a loss to the country. So accumulation is not the right answer. Right answer is accumulation to the stage of where it is needed for your balance of payment means obligations. Okay. So this is again false over here. To ensure the implementation of country's exchange rate policy. What do you mean by implementation? Implementation is not done by RBI. RBI gives the directions and commercial banks have to implement this. So each bank has to implement it on its own. So the correct answer to this becomes only A. To ensure that the country's balance of payment remains in equilibrium. This is the main job of RBI. Balance of payment, because if your balance of payment goes haywire or if it goes in different directions, if there is a huge deficit. Okay, let me give you an example. Balance of payment is not in equilibrium means what? If my incoming dollars are more than my outgoing dollars, then it's okay for me. My balance of payment is in surplus. But if the reverse situation is there, then the problem is, in that case, I'm having more expenses and less income. So that is a problem for any country. So that's why to ensure that country's balance of payment is in equilibrium means there should be more incoming dollars than the outgoing dollars. Okay. Before going ahead, download Adda 24/7 app on your mobile. In this app, you will be getting the premium study material, plus live classes, ebooks, tests, whatever we need for clearing JIB and CIB, we get it over here. Sure, we need live classes. Generally, what do we need it for clearing any exam? One is somebody to teach you, so live classes are there. You need books, so ebooks are there. You need tests to give you the confidence, so tests are there. So that's why download it right now. Okay. The exporter should necessarily submit the export documents to the bank within 15 days from the date of the documents, 15 days from the date of shipment, 21 days from the date of documents, 21 days from the date of shipment. So what is the rule actually? What do you mean by this question actually? Whenever any exporter sends the goods, okay, this is the exporter and this is the importer in, let's say, USA, okay, importer. So this exporter is sending the goods, so goods will be sent via ship, okay, generally they are sent via ship only, okay, ship to USA. So once the goods are sent, the shipping company will give them the bill of lading. So exporter will bring these documents, bill of lading plus invoice, insurance, then bill of exchange, packing list, certificate of origin. All these 6 documents this exporter will bring and submit it to the bank. So this is the real question. So these documents are to be submitted in how many days? These are to be submitted within 21 days from the date of shipment. What is the date of shipment? Date of shipment means this is called as on board. Whenever you get on that BL, you get a stamp, on board date. So that on board date is known as the date of shipment. It's called a shipped on board. In some books write it, some shipping companies give you only shipped. Only shipped is also okay. Only on board is also okay. Shipped on board is also okay. Any of these 3 words is allowed. Okay. So the exporter needs to submit the documents, export documents to the bank within 21 days. It's actually not the word bank is not a correct word. It is called as AD, authorized dealer. Okay. Authorized dealer. The multinational company encounters the following exposures to foreign exchange risk. Which are the exposures to foreign exchange risk? Foreign exchange risk. So, which are the problems which the company encounters? Translation exposure, economic exposure, transaction exposure, and all of them. What is the translation exposure? What is the translation exposure? Translation exposure is known as notional. Notional, okay? If I am having a branch in New York and that branch's P&L means balance sheet, I have to submit it to RBI over here in rupees. So I'm not closing that branch. I'm just taking some fixed date. On that date, what is my P&L? And I'm submitting it to RBI, converting it to rupees. So that is always notional. Economic exposure. Economic means the conditions, economic conditions of any country. Or even many countries, I would say, a group of countries. So that is the economic exposure. Transaction means what? It is related to specifically the buyer. Generally, transaction exposure relates to the legal problems also, to the credit problems also, and to the market risk problems also. All these are commonly affecting the transaction exposure. So any MNC which is working in various countries will always be faced with all of these exposures. Translation also, economic also, and transaction also. Okay. Everyone subscribe to Officers Adda 24/7 YouTube channel. In this channel, you will be getting the latest updates on JIB and CAIIB, number 1. Number 2, you will get various YouTube series on all the subjects of JIB and CAIIB. What do you mean by this? Latest YouTube series. Here, right now, what are you watching? You're watching the YouTube series on BFM. Right? Similarly, for other subjects also, you'll get the same YouTube series. So that's why subscribe to it right now. Click on the bell icon. Okay. Share it with your friends. Okay. The role of hedging agent is, what is hedging basically? Hedge means what? Hedge means to reduce the risk. Basic meaning of hedge is reduce the risk. Okay. So how to reduce the risk? So that is the basic question over here. The role of this hedging agent is assist the firm in determining which foreign exchange transaction it should hedge. Okay, means which of the forex currency should be hedged. The currency which is having maximum fluctuations will always be hedged. Always remember what is hedged? Something which is having maximum fluctuations, because that is only having the higher risk. If somebody is not having, here, if I draw this line. So is there any risk here? If I go on the straight line like this, there's no risk. Okay. But if I go like this, sometimes over here, there, something like this. So now there is a fluctuation. So what is to be hedged? Whichever is having the fluctuation will always be hedged. So that's why which currency is most traded or which currency is having highest risk, that will be hedged. So assist the firm in determining which foreign exchange transaction is to be hedged. Okay. Assist the firm in determining the terms of the currency and interest rate swaps. Now, what are interest rate swaps? The exchange of interest rates. These are known as interest rate swaps. Exchange of interest rate. What do you mean by exchange of interest rates? Interest rates can be exchanged. Remember, swap is of always 2 types. Okay. One leg is always fixed. and other leg is always floating. Okay, so swap will always be of will have always two legs. So whenever you say interest rate swaps, means you are exchanging two interest rates. One interest rate which is fixed and other interest rate which is floating. Now what can be the simple example? Simple example is, let's say FD. FD's interest rate is always fixed. What is the floating interest rate? Suppose if I am investing in, let's say, stocks, shares. So the returns which I am getting will always be fluctuating, floating. So that's why if I exchange these two returns, okay, in the long run, then that is known as a swap. So assist a firm in determining the terms of the currency or interest rate swap, both A and B, and none of the above. So what is the answer? Answer is this, both A and B. Because the hedging agent means what? It's generally a company or a human being, no, normal human being, individual person. That hedging agent determines which currency is to be hedged. If something is not has no liquidity at all, some currency, then what's the use of that? Brunei currency, Brunei, very high currency, but no liquidity. What's the use? Dollar having huge liquidity, that can be hedged. Assist the firm in determining the currency or the interest rate swap, right? That's also important. Yeah. Now this is related to TCS. TCS means what? Tax collected at source. This is a typical case study which you get in the exam. So in case of non-availability of PAN or Aadhaar, TCS is collected at 10% on Forex. This is totally related to Forex because we are in chapter number 1. So tax collected at source here, TCS, I'll write it over here, TCS equals to tax collected at source. Okay, that is known as TCS. So in case of non-availability of PAN, TCS is collected at 10%. TCS is also applicable to transactions involving transfer of domestic rupee account to NRO under the LRS scheme. LRS means liberalized remittance scheme. So if I transfer the money from rupee to NRO, then also tax is applicable, obviously, because I am transferring from the savings account of my resident savings account to the NRO account. Remittance under LRS towards studies abroad, where the sources of funds is educational loan, is 0.5% TCS, will be the TCS and applicable over the threshold of 7 lakhs. So if I go outside for studies, remember what does this line say? If I go outside for studies and I take a loan for going outside, then the tax applicable will be 0.5%. The important part, remember this, I must have a loan over here. If I go on my own money, then the TCS or tax applicable is not 0.5%. Okay, only if I take the loan, only then it is 0.5%. Got it? Now let's take one example. Customer A. Customer A makes a remittance of 6,50,000 on April 4, 2020. So this customer makes a remittance of 6,50,000 on April 4th. Okay, what do you mean by this? On April 4th is this customer is making the payment of rupees 7. Now what is this limit given? 7 lakhs. Just now we saw it. Up to 7 lakhs, there is no tax. No tax. So now if somebody comes to me first time on April 4th in this financial year, so no tax will be collected, obviously. Why should I collect the tax? Because it has not crossed the limit of 7 lakhs. Now the same person comes again on May 5th. At that time that customer wants to remit 9,50,000. Now what is happening? 950 plus 650. See here, earlier he has remitted, this customer has remitted, he or she has remitted 650. So what is the total amount of remittance now? It is 950 plus 650. So 9 plus 6, 15 and 116, right? So 16 lakhs have been remitted up till now on May 5th. What does the limit say? 7 lakhs. So now what is the difference? 16 minus 7, so 9 lakhs. So 9 lakhs I'll be collecting the tax because that is above the limit, isn't it? So look at this. 5% tax will be collected on 9 lakhs. Isn't it simple? See, the calculation is also given. 650 earlier plus 950 minus 7 lakhs. So 9 lakhs. So 5% on 9 lakhs will be collected. Whatever that amount is, okay? That will be collected. 45,000, isn't it? Next. makes a remittance of 40,000 on December 10th. Means same person is coming back on December 10th. So what is the, he has already breached the limit. 7 lakhs is already gone. Now we are going in for the in the extra regime. So here I'll just tax him on the 40,000. Why? Because already the remaining tax has been already paid by that customer. So 5% tax will be collected on incremental 40,000, right? Because he has already breached the 7 lakhs limit and paid the tax accordingly. So 40,000 into 5%, whatever that amount is, 4 5 is 20, right? So 2,000, I think so, yeah. So that much will be the tax paid by that person, isn't it? Now look at the second person, B. Makes a remittance of 20 lakhs in the same financial year. Means immediately this person financial year has started. This person comes on April 30 and makes a remittance of 20 lakhs. Now this is quite obvious. 7 lakhs is first only breached in the first transaction only. So what will I charge him? I'll charge him 20 minus 7, 13 lakhs. 5% tax will be collected on 13 lakhs. So what are we assuming over here? The customer is having PAN number. If the customer is not having PAN number, then 10%. Okay. So here I'll be charging 5% to this customer. Now look at the customer C. Makes a remittance of 10 lakhs for pursuing education through a loan obtained from an FI. So look at this. There is a loan now. If there is an education loan and I am going for education, then what is the tax amount? 0.5%. And that also beyond 7 lakhs, right? Up to 7 lakhs, no tax. So 10 lakhs I am expending. 10 lakhs minus 7 lakhs, 3 lakhs. See this. 0.5% tax will be collected on 3 lakhs, isn't it? So whatever that amount is, 3 lakhs means 10 minus 7. So 3 lakhs into 0.5%, very less amount, hardly about 1500. So that will be collected. So this is the difference in taxation. Tax collected at source for forex transactions. Okay. Very important numerical from your exam point of view. See this batch. Everyone should join this Sankalp batch starting on September 4th. All the 4 subjects are covered, numericals, objective questions, case studies, everything is covered. Mahapack, you get multiple batches. Plus you get live classes, video courses, ebooks, test series, mini and Maha marathons, practice papers, doubt sessions, everything in what fees? What is the fee? Huge discounts are going on. Right now 80% off is going on. Let me show you. Go to Adda 24/7. I would always suggest you first to download the app. Because in the app you are getting 1% extra using the coin system. Okay. So first you download the app. So let me show you. Go to Adda 24/7. Done. Says click on CAIIB and CAIIB front page itself. Click on CAIIB November 23. Now we'll see the batches. See this Sankalpa batch. Click on this Sankalpa batch. September 4th, fresh batch starting. 300 hours online live classes, 56 test series, 65 ebooks, recorded sessions. What all do you need? Click on buy now. Code is already applied. August AUG 80. 80% off is applied. 23,999 reduces to 4,799. Huge discount. Go for it. In fact, I would suggest you to go for Mahapack. As I told you, Mahapack means multiple batches. Okay. So go to here CAIIB. Click on CAIIB Mahapack over here. Now click on CAIIB Mahapack. This one. Again, see 500 hours of online live classes, 121 test series, 216 ebooks, 962 videos. What all do you need? Recorded videos are available. Look at the fees, 80% off, and cherry on the cake. Remember, double validity. You are getting this for 6 plus 6 months, Mahapack. Okay, so everyone should join this immediately. I'll be back tomorrow with another series. Till then, do the studies and do join the batches immediately. Okay, bye from my side. And objective questions. Today we'll be covering chapter number 5, facilities to exporters and importers. Very important chapter from the exam point of view also, because many of the important questions, because here basically banking is today related to export and import. Trade finance is one of the important elements of your banking. So that's why this is one of the important chapters, and many questions, roughly around you'll get 8 to 9 questions on this chapter itself. You might get one case study also on this. So let's start. See this. We are today solving objective questions, all the objective questions. Okay, important ones. All means not all is never possible, isn't it? Because this topic is so huge. We can just cover some part of it, majority, as much as possible. So let's start. Finance allowed to an exporter to fund the needs of procurement of raw material, manufacturing, and up to the stage of packaging and shipment is called as dash finance. So what is it called as? Allowed to the exporter to fund the needs of procurement of raw material manufacturing here. This is basically for manufacturing part. So always remember there are two types of finances. Mainly, there are many types, but mainly two. One is pre-shipment. Okay, pre-shipment, and second is post-shipment. Okay, second is post. Okay, so pre-shipment and post-shipment. Again, shipment only. I won't write this now. So pre-shipment and post-shipment. What is pre-shipment? Pre-shipment means before sending the goods, manufacturing. It includes everything: raw material, manufacturing, labor, packaging, everything. Means whatever is required for manufacturing is required over here. So that's why this is known as pre-shipment, before shipment. And post-shipment means what? After I ship the goods. See here, how do I manufacture in any business? What do I do basically? I get the order. See there. I get the orders from somebody. Then that order I process it. Processing. For that processing I require all these things. Processing. And after processing is done, what do? I ship it. In export, we ship it on generally on the ship, right? We ship it and we send it to, let's say, any country, UK, USA, anything. Okay, let's call it USA, simple. Okay, so this part up to the part of shipment is known as pre-shipment. And once the goods are shipped, it is known as post-shipment. So this is known as what? Pre-shipment. Okay, there are two names to this. One is pre-shipment. I'll write it over here. One is pre-shipment. And second is packing credit. Packing. That is also another name. Okay, packing credit. So finance allowed to an exporter to fund the needs of procurement of raw material, manufacturing up to the stage of packaging and shipment is called as packing credit finance or pre-shipment finance. Done? Clear? Second, while considering the export credit, it must be ensured that the exporter's name does not appear under exporter's dash of RBI and dash list of ECGC. Now these two names are very important. Names mean these are simple ones, but what happens, we forget them. Okay, so what is the name called as for RBI? Here, shall I remove this now? Pre-shipment, post-shipment, you know this? I think so. We'll remove this, isn't it? So, yeah. Or no, yeah. Let me remove this. Okay, let me remove this completely. Yeah. Now, there are two lists of RBI. Two lists basically. One is of RBI, and second is the ECGC. Okay, let me write it over here, pre-shipment, so that you remember it. Okay, pre-shipment. One is of RBI and second is of ECGC. Now what is that list of RBI called as? RBI's list is called as, always remember, RBI gives you caution list. Caution list means what? Caution means beware of these clients. So the customer who is coming to you, you should always check the name in that caution list. If the name appears in that caution list, it means that customer is not to be dealt with. Why does the name go into that caution list? The name goes into that caution list because there are certain problems in that person. For export, let's say, export. The goods have gone, but the money has not come in. So now it means there is some problem with that client. Or for imports, bill of entry is not produced. So what does this mean? This means the customer is not trustworthy. So that's why RBI has caution list over here. But what does ECGC have? ECGC, remember, ECGC has two lists. Always remember. This is something new which I am telling you. Okay, let me give you first the answer of this. ECGC list is what? For this, the ECGC list is known as special approval list. Specific or special or specific we call it. Okay. It can be specific or sometimes it's called as special. So specific approval list. So specific approval means what? ECGC tells the bank that, see, what is ECGC? Export Credit Guarantee Corporation. It is basically for insurance of the whatever exports we do. Okay. Now what does the ECGC tell you in this specific approvals here? It tells you whenever you are dealing with that client, remember you have to take the approval from ECGC. Important one. Means I can't deal with that client without informing ECGC and getting the approval. It means what? That client is in a problem, right? So this is one list of ECGC for clients, and there is one separate list of ECGC for goods. Now this is not asked over here. I am giving you generally, okay? That is known as OGL, Open General License, OGL, okay? That is another list, but that is not part of this question. So I'll just mention this and you can search it on Google, Open General License, okay? Normally, the total period allowed for PCL should not exceed dash days. PCL means what? Packing credit, this pre-shipment, packing credit, pre-shipment, anything. Okay. So normally this PCL period should not exceed how many days? Anyone just type in the comment section. Everyone just type in the comment section. Yes, it is. Normally it is 180 days. Correct. 180 days. Okay. Normally, any PCL should not exceed 180 days, but maximum period is given by RBI as 360 days. It means 99% of the customers will be treated with 180 days. In specific case, something untoward happens because of the client, on case-to-case basis, you can extend up to 360 days, but not beyond this. At any cost, not beyond 360 days. Okay, got it clear? PCL advance should be liquidated on submission of relative export documents by way of allowing dash finance against those bills. What is this, man? One advance I am giving closing by using another advance. Is it right way? Means PCL is what? Packing credit. Okay. So packing credit advance should be closed by way of allowing dash finance. So I am again doing a financing to close my earlier finance. So is this allowed? Yes, it is allowed. Only in case of exports it's allowed. As I told you, what is pre-shipment? Pre-shipment means before the shipment, right? Before manufacturing everything. So this I'm giving it as pre. So once the goods are shipped, okay, once the goods are sent, then I'll give them the post-shipment. So what will this post-shipment do? This post-shipment finance is always given 100%, 100%, okay? Always. So how does the bank finance it? If the bank has already financed pre-shipment, see, pre-shipment is generally 75 to 80%. Okay. So if the bank has already financed pre-shipment to this guy, and now they want to finance this post-shipment. So what will they do? They won't give this money to the client. They'll first close the loan of theirs. Their loan, they'll close it first. And then whatever remains, how much will remain? Let's say, excuse me, if 100%, 100 rupees is given as a finance, and earlier pre-shipment was given as 75 rupees. So what will they do? They'll first close the 75 rupees and then remaining 25 rupees will be given to the client. This will be given to the client. Always remember this. Post-shipment is never disbursed completely 100% to the client. First it is checked whether pre is there. If pre is not there, then complete 100% can be given to the client. But the question over here is, PCL advance should be liquidated on submission of relative export bills by way of dash finance. So that is post-shipment. I'll write full name, post-shipment, by allowing post-shipment finance. Okay, this is the answer. PCL allowed without prior lodgement of order or LC. It's called as dash facility. What is this? Without, see, what is PCL basically? PCL means packing credit. How is packing credit given? Packing credit is given because suppose if I am the exporter, I have got some order, okay, from USA. So what do I have to do? I have to manufacture those goods, right? Manufacture those goods and then send it. For manufacturing, I need to show it to the bank. Let's see. This is the order I've got. So this much order. So now finance. So order I'll have to show. Now what is the question over here? Look at the question. The question says that without prior lodgement of order, no order is received and you are just financing it. How is it possible? Is it possible? It is possible. How is it possible? It is possible for large good corporates, not large actually, good corporates. Good corporates. The corporate should not be large. Large means what? When I say large, it means what? It means Reliance, Tata's, or Infosys, all these. So are these the only clients of the bank? No, these are not the only clients of the bank. These are very few clients. Other small companies are n number of companies, right? So good client is the right answer. For good clients who are the regular clients of the bank, so bank can give them this pre-shipment finance without this order also. So that is called as running account. Running. It's like the current account facility. Running account. Okay. So what does it mean? See here, without producing the order, I can finance this person. Okay. But it doesn't mean that order is never to be produced. It is called prior. It doesn't mean never, no lodgement. Lodgement has to be done, but that can be done within 30 days. Within 30 days of financing. That has to be done. Okay. Only for time being it is that the clients are good ones. So these good clients, why should they be always asked to produce these orders, purchase orders or LCs? Okay. So that's why it's called as running account facility. But there also, within 30 days, the client has to produce it. Okay. Post shipment finance is essentially an advance against. What is this against? Post shipment finance is given against what? Against? It's basically what is this? It means see this. What did I tell you over here in this D question? Post shipment means what? Goods are shipped. Goods are shipped means what? I have sent the goods. Now I'll be receiving the money from this guy. So that person becomes what? Who is giving me the money? That becomes my debtor. Isn't it? That person becomes my debtor. See here, I am seller. I have sold it on credit. On credit, right? So if I have sold it on credit, this guy becomes my debtor, the buyer or the importer in that country. So this debtor financing is always done in that is called as post shipment finance. So that is the advance against what? This is basically receivables. Debtor means what? It's receivables. Means I'll be financing the receivables. That's why these receivables are financed at 100%, complete 100%. Okay. So post shipment finance is always given against receivables and given for 100%. Okay. Before going ahead, subscribe to Officers Adda 24/7 YouTube channel. In this channel, you will be getting the latest updates on JIB and CIB. Number one, updates, very important because IIBF gives regular updates and we don't have time to visit the IIBF site, right? So that's why it is given directly, explained also, not only given, explained also. And secondly, you get free YT series, YouTube series, free, okay? On this, what is this free YT series? Right now, what are you watching? You're watching the same free YT series on BFM. Similarly, you get it from for ABM as well as other subjects. So that's why follow this till the end and follow this religiously. There are more chances of your exam, of yourself clearing the exam. Subscribe to this channel. Click on the like button. Click on the bell icon. Share it with your friends. Sharing is caring. Okay. In case of Rupee Finance, the bill is to be purchased, discounted, negotiated at appropriate dash rate. What is this rate? Dash rate. See, a Rupee Finance I am doing. Okay. So the bill is to be purchased, discount. Now, what are all these names? I'll just cover them in short, fast. Okay. Purchased is always for site. Discounted is always for non-LC bills and negotiated is also always for LC bills. So at which rate? It is always here. You are taking the risk. So it is called as bill. Bill buying rate. Always you have to do it at bill buying rate. Okay. Always remember this. The finance is to be done at bill buying rate. Next one. Dash of documents takes place when export documents are drawn under LC. What takes place? Just now I told you, isn't it? Purchased is site, discounted is collections, and negotiated is under LC. So LC, sorry, LC. So dash of documents takes place. What takes place? Negotiation. Negotiation of documents takes place. Okay. So if the documents are under LC, if they are under collections, it is called as discounting. If it's a side document, then it's called as purchasing. Okay. The NTP allowed at present is generally dash days for all foreign currency export bills. NTP is what? NTP. There are two names to this here. Normal, it's called as normal transit period. Normal transit period. But some books write this as notional also, not normal. Some books write this as notional also. That is also okay. Notional means imaginary, hypothetical. Okay. So normally 25 days are required over here. These are generally 25 days. That is approved by FEDI. What is NTP? NTP means here basically documents move from Indian bank. I'll write it over here. Indian bank to foreign bank. Issuing bank. Okay. Foreign. Issuing bank in case of LCs. So documents here, it's only documents. Documents, whose documents? Documents of the exporter over here go to the foreign bank. Then these days are known as NTP. Not only these days, the foreign bank checks the documents and then pays. So NTP includes three parts: movement, second checking, and third one is payment. All the three parts are included in NTP, and that is known as, that is 25 days as per FEDI. The present interest cap on PCFC EBR for 180 days is LIBOR plus. Now LIBOR is gone, man. There is no LIBOR. It is ARR now, isn't it? Alternate rate, reference rate. So ARR plus. You can take LIBOR, but LIBOR is gone now. So ARR plus. So what is that? ARR plus. Yes. ARR plus. What is the rate given? It is maximum 3.5%. 3.5. Okay. Dash and dash are two other methods of financing exports. Two other methods. What are the two other methods means what? Which are the first methods then? First methods are pre and post. Pre and post, right? Post. These are the first methods, 1 and 2. 1 and 2. And now they are talking of 3 and 4. So 3 and 4 is what? 3 and 4. What is this 3 and 4? Now that I'll write it over here. What are the two methods? Here, I'll write it over here because many of us don't know actually. It's factoring. Factoring. And second one. Now I'll give you one name. So second name you write it in the comment section. Factoring and. What is the second name? Factoring, one name I gave you. Now second name. It is forfeiting. Right? Now look at this. What is factoring and forfeiting? Very big topic. I've taken it separately in the same series. Okay. Factoring and forfeiting. So these are the two other methods of financing exports. Okay. Everyone, download Adda 24/7 app on your mobile. In this app, you will be getting the premium study materials plus live classes, ebooks, tests, whatever you need for clearing JIB and CIB. You'll get it over here. What I need for clearing this CIB exam? One, classes. We have online classes. Second, you need the books. Ebooks are available. You need tests. Tests are available. So everything is available. Download it right now and start studying. Exams are very near. Guaranteeing the payment of bill of exchange is called as. Now what is this? Bill of exchange. Guaranteeing the bill of payment of this means what? See here, this is bill of exchange means what? It is always drawn by the drawer, exporter generally. This is exporter or drawer. Okay. Export. It is drawn on whom? The importer, or this is known as drawee. drawee. Okay, but what is this guaranteeing? Guaranteeing by whom? Here in this case, exporter is asking this drawee to pay, right? So this guy is guaranteeing. But here now the role comes of the bank. What does the bank do? Bank puts a separate stamp on this bill of exchange. Accepted. Bank. It'll write accepted, gives the stamp, accepted. What does this mean? When bank writes the stamp accepted over here, it means that bank is guaranteeing this bill of exchange, saying that on due date, if this guy doesn't pay, this drawee doesn't pay, then I will pay. Mean this is a secondary liability. This guy has to pay first. If this guy doesn't pay, then bank will pay. Now, what is this known as process? This process is known as availization. Avail, A-V-A-I-L. Availization it's called as availization. Okay, or avail we call it. So guaranteeing payment of bill of exchange is known as availization. A factor would finance generally -% of the invoice value, while forfeiting can be done for the full value. Okay, so this factor means what? Factoring. So factoring will finance how much percentage? Now this is something, that's why I said this is a huge topic. Okay, factoring is generally done for 75 to 80%. 80% factoring. Okay, and forfeiting is done for 100%, always 100. That is one of the main differences of factoring and forfeiting. Okay, so factoring is done for 75 to 80. There are many other differences. In factoring, it is with or without recourse, and in forfeiting, it is strictly without recourse. So that's why it will take almost half an hour to explain factoring and forfeiting. I'll explain it in some other topic, or else you can check Adda 24/7, this Officers Adda 24/7 YouTube channel, and there you'll find it. That's why I'm saying subscribe to this, click on this bell icon. Okay, chalo. Now look at this Sankalpa batch. Sankalpa batch starting from September 4th. Very important batch. Exams are near. Okay, join this batch ASAP. I think this will be the last batch for this season. Detailed batch, long batch we call it. This will be the last long batch for this series. So join immediately. All the 4 subjects are covered. ABM, BFM, ABFM, BRBL. They are covered. You can join the Mahapack as well. Mahapack 2.0. In this you get live classes, ebooks, tests, then mini mega marathons, doubt sessions, everything, practice books. So how to join this? Huge discounts are available. How to join? Let's see. Go to Adda 24/7. Let me take you to Adda 24/7. I would always suggest you to go through the app, because in the app you're getting 1% extra, generally using the coin system. Okay, so that's why go through the app. Okay, now on Adda 24/7, once you go there, click on the front page. In the front page you see the JIB and CIB. Click on CIB November. Look at this, CIB November 23. Done. Now look at this. See the Sankalpa batch, September 4th starting. Join this batch. Click on this. 300 hours of online live classes, 56 test series, 65 ebooks. What all do you want? So much. At what fees? 4799. 80% off is going on. Okay, IND 80 code still useful. Okay, so click on buy now. Click on buy now. Just put this offer. This offer is already applied. Click on continue. Make the payment. Give the details. Make the payment. Done. In fact, you can go for this Mahapack also. In Mahapack, you get multiple batches. See this Mahapack, JIB, CIB, Mahapack. You get, see the JIB, CIB, common Mahapack, CIB Mahapack, JIB Mahapack. Click on CIB Mahapack. Now look at the fees again, 7367. What are you getting? 500 hours of online live classes, 121 test series, 216 ebooks, 962 videos. So much. Okay. Click on buy now. Okay, now look at this, 80% off plus validity is 6 plus 6 months, double. That's why I'm saying join immediately. Okay, click on continue, make the details, fill the details, and done. Make the payment, done. 80% off, 7367, it's reduced from 36837. Such a huge discount and a double validity, you rarely get such offers. So join immediately. Exams are near. I'll be back tomorrow with another series. Till then, bye. Keep studying.